Hello, I'm Bernard Hickey from interest.co.nz and welcome to our special series, The 11 Megatrends of 2008. Today we look at trend number 6, the most banking collapses since 1930. It all started, of course, with the fallout from the subprime mortgage debacle in the United States, which really roiled credit markets and became known as the credit crunch. It is the word of 2008. But the first to fall was actually across the Atlantic in Britain, when Northern Rock, a building society that had grown into a major lender by going to the wholesale markets, essentially had to shut down because of a run on the bank. Then we saw in March Bear Stearns collapse, then Fannie Mae and Freddie Mac, the big mortgage providers, and then the key moment of 2008, the collapse of Lehman Bros in September. In retrospect, the US Federal Reserve believes that Lehman Brothers should not have been allowed to collapse. But whatever the case, its collapse scared everyone so much that it triggered a series of essentially runs on banking stocks and the collapse of activity in the credit markets. Through that period, we saw AIG, the world's biggest insurer, essentially collapse and have to be bailed out by the US taxpayer. Then we saw Morgan Stanley and Goldman Sachs having to go to the Federal Reserve and beg to become banks so they could get special lending from the Federal Reserve. Merrill Lynch, one of the world's biggest investment banks, had to jump into bed with Bank of America just to survive. Citigroup, at one stage the world's biggest bank, had to beg for a US government bailout. Back over the Atlantic, Royal Bank of Scotland and Lloyds Bank TSB had to use government money to survive. They were essentially nationalised or part nationalised. And over the 2008 so far until about mid-December, we had seen 29 banks and savings and loan institutions collapse or be bought out in the United States. This was the worst series of banking collapses, both in the sheer size of it and the number, since 1930-31. The key moment was the weekend of October 11th and 12th, when many people believe the world's financial system came this close to a systemic meltdown. Eventually it took widespread government deposit guarantees to stop that from happening. So what about here in New Zealand? Well, it hasn't been quite so dramatic, luckily. Our big four banks have all had AA credit ratings, which is actually very rare in the world of banking. We have relatively simple banks. They haven't been involved in a lot of investment banking. They've got very little subprime exposure to the United States, certainly as a percentage of their total assets. They're actually much more aggressively regulated by APRA, the Australian regulator, and the Reserve Bank of New Zealand here in New Zealand. They have better capital levels, well over 8% now and rising. They were also quite careful to raise extra capital in 2008 and now in late 2009 in the form of bond issues and share issues. All of them now have Tier 1 capital ratios, the measure of how much they have in reserve of the best type of assets, of over 8%. Having said that though, even though they are the safest pretty much in the world, the Australian and New Zealand governments had to bring in government deposit guarantees to calm the market and essentially to avoid being caught out by a run offshore to other markets with deposit guarantees. So that's the banks. We have actually had our own little credit crunch debacle in the finance company sector, where we calculated there are 43 frozen funds and finance companies now with $6 billion frozen inside those accounts, over 177,000 accounts. We think around about 500,000 New Zealanders either directly or indirectly affected by the collapses or the freezings of these finance companies. Got to remember some of the names. Back in March, it started with MFS Pacific and Lombard. And then we had that horrible period in June and July when Dominion Finance, Dorchester Pacific, St. Laurence, Hanover, all collapsed or were frozen in the space of a few weeks. It really has been an annus horribilis for finance companies in New Zealand. But we end the year on an upward trend for finance companies. Many were saved by the bell of the deposit guarantee schemes on that weekend, October the 11th and 12th. We'll all look back on that weekend as a key one in the history of 2008. It has meant actually that finance companies, because of those guarantees, have actually had to reduce their rates to turn off the tap. Money was coming in the front door that quickly. However, we end the year with the most enormous fraud, which is putting new pressure on the global banking system. Bernard Madoff, the hedge fund manager in New York, who looks like he's lost $50 billion US, and a cavalcade of banks that run from HSBC, BNP Paribas, Royal Bank of Scotland, Nomura, have all lost billions and billions in this fraud. So I'm not out of the woods yet. But that has been one of the 11 megatrends of 2008. The biggest number of banking collapses and the biggest financial market strife since 2008. I'm Bernard Hickey from interest.co.nz in association with ASB.